Well, we're back after a long holiday. I mean, we started work a little bit last week, and I have to say the year end, I mean, the last trades of the year that we had in the Japanese yen have actually made up the year. I mean, it has actually, it was a good ending. It was and it still is. I mean, we're still holding the yen pairs. It is actually, it's one of the best trading years we had. I mean, for a while. I mean, it was very nice moves, and I'm looking forward that these moves that we had in the end to continue. As you all may know, there has been some political changes or some political rambling that's been going on during the month of December, like the fiscal cliff and the stuff like that in the United States. As well, in Europe, there has been also some issues coming up with regards to the euro, and there has been also some serious changes in the fiscal policy of Japan. Next week, we are going to be doing the trade planning session on Monday and not on Sunday, because it's Martin Luther King Day in New York, and it is going to be a holiday. So we will be having, like, let's say, a long weekend next week, and we will be doing the planning session on Monday. But next week, that Monday, is a special trade planning session. As some of you know, every year I do an annual trade planning session, which we look pretty much at the global events, looking at the global markets, looking at the macro trends, if you will, for the year. So it will probably be next Monday, the 15th. This will be the big session. It might take a little bit longer than the couple of hours. It will be done at the same time, but it's going to be done on Monday. And as I said, it will be the annual planning session that we're going to be looking at the macro trends for it. Okay. Having said that, just to brief you on a little bit fundamentally of what's been going on, we do have right now we have temporarily passed over the fiscal cliff, and the FOMC minutes have been released last week. And in those FOMC minutes, if you read them, and I will be posting them on the website, I've been reading them this morning, they made a very pertinent remark, is that with all the fiscal easing that they have been doing to the US dollar by buying the bonds, the Federal Reserve also have been, let's say they buy $1 billion of bonds. At the same time, they go on the other side and they mature as an equal amount of bonds. Therefore, the balance sheet of the Federal Reserve, with all the easing they have been doing, did not expand. The balance sheet did not expand, and that means that there is some physical constraint. Believing it or not, they have been handling it, I think, very smartly, because the more they buy to stimulate the economy, and they have stimulated the housing numbers, they have stimulated you can see the unemployment numbers have been shrinking or declining tremendously. At the same time, they have been controlling it on the other side of the ledger, and that was very good for the US dollar per se, and you can see simply by just taking that one line into consideration, you see the move that is being coming up into the dollar, and the dollar now is coming back in favor to become one of the havens, the currency havens in the world. There is now an appetite towards buying the US dollar. That is one aspect of the equation. The other aspect of the equation, we're going to go to the numbers in a minute, is what's happening. And when I say the dollar, it is not just the US dollar. There is also some buying that's coming in to the Canadian dollar, if you will. And there is also some buying in the slightly in the Australian dollar, and if you want, would be the New Zealand dollar also. So there is buying that's coming in to the, in all, let's call them the dollar denominated currencies. So the Australian dollar, the Canadian dollar, the New Zealand dollar, there is certain appetite coming in, but mostly and unequivocally in the US dollar, as you can see on the screen. In addition to that, there is the new government that came into Japan, the Abe government, and they have made it extremely clear that the government is going to do everything in its power to lower the value of the currency. And as you can see, this is the chart for the Japanese yen. And we're technically, as you all know, we have been discussing the situation technically even before Abe. And this is the beauty or the differentiation between the technical aspect of how to read the chart and then waiting for the fundamental information. We have been short the Japanese yen pairs from here, pretty much from here, from the 125, and the second structural point, as you know, is the 119. And we have been short, and I have been posting that, the Japanese yen. But anyway, to cut a very long story short, they have announced that they will be basically what the government's policy is to achieve, to lower the value of the Japanese yen. And it would be lovely, I mean, it would be really lovely and actually beneficial to our bottom line in all our open positions, that if the Bank of Japan intervenes and actually starts pushing the intervening against the Japanese yen by selling more Japanese yen. I mean, I hope they actually would think about doing that, because it's going to actually make us more money. These are, so with that, we have fundamentally some broad line strokes in the currencies. And so basically we have a fundamental buying coming in the US dollar. We are having fundamental weakness primarily in the Japanese yen, and then also we are having some weakness because there is some flight going out of the euro. There is a flight towards the US dollar, towards the safe haven now of the US dollar, and the, by association, the Canadian and the Australian. So as a macro view, we will be looking to be shorting the Japanese yen, and we will be looking primarily to buy the dollar, and then we are going to begin to selectively see which of the other dollar based, what is denominated as dollar, i.e. the Australian and the Canadian and maybe the New Zealand, which ones would be our choice in actually buying them. Okay, so with that we start with the US dollar as always, and this is our weekly chart. For some reason, coming back from the holiday, most of my charts and my radar screen have been deleted, so I have to come back and actually redo my charts again, setting up the structure points, but we do remember most of them anyway. So if we go back, as you can see on the weekly chart for the US dollar, we are still technically in a bear market. This is our last momentum low, and we have been holding this area here over the last, towards the end of 2012, and this here would be our initial structural point, which is the 81,665. That will be the breakout or the trend changing point on the US dollar to the upside. We have this is the 79.71, and I think here this is the 80.04 level. And what we have now is, as you can begin to see, I mean, if I'm taking a shorter picture, a chart for the last 6 months or 7 months or so, which is from April of last year, I mean close to a year, we have been moving nicely to the upside, and we are beginning now. We have held these structure points, and now we're pushing higher. And as it stands right now, we are looking to be buyers of the US dollar, and we're looking for the dollar to actually start pushing back up against the 81.85 level. But for this, initially I would like it to trade above the 81.65, which is this structural point over here. So we're focusing now, as part of our pairing, we'll be looking to be buyers of the US dollar. And as you can see here, looking at this chart, we have had several positive days, big range days to the upside, and even with the movement that happened on Friday, we have traded above the big range day, and we are holding right above that area. So that's very positive, and we'll be looking to be buyers of the US dollar. So with that, I'm going to put the dollar as a strong currency, and we'll be marking it as strong. We know, just looking at the Japanese yen, I mean, this trade pretty much is a no-brainer trade. I mean, being short the Japanese yen is a no-brainer trade. When it came to the structure point, which is 119.37, the yen just went through it like butter, and it has declined, broken below the structure point with extreme momentum, and that is what we want to see. That is the confirmation that this is a trend change, and we should be looking for it to continue down. There is no the first area where we can begin to look and see where it can possibly slow down or a pause. I mean, just by looking and stretching that horizontal line, we can begin maybe at this level here, because that was a momentum high. That is 112.39. But I would like, in this case, to look for an area that was support, something where the market was coming down and it stopped. So in coming down and it stopped, this is here. This is the one that pretty much I can see, and I can see that there is also an inverse high over here. So probably this area here, which is the 10992, would probably be the one where the market, the Japanese yen may, or this wave or push to the downside to the yen may pause. And Andrew, as we were talking the last few days, this is a bear market, so we can see the volatility and the speed of the decline. That volatility, and if it comes down towards the 109, we may get a volatile snapback. So we will be careful as soon as it passes the 112 towards the 109. This will be an area where we be looking to any sign of a reversal so that we can capitalize or we can book our profits. Okay, so that is the Japanese yen, and of course the Japanese yen in this case is extremely negative, so it's going to be 3 shorts. I mean that it is a bear market. It is a bona fide and a confirmed bear market. The next one we're going to look at is, again, to continue in the bear on the sense of bearishness, is the euro. And the euro, what is happening with the euro is quite interesting. We have here a pattern that I would like you to see in the euro. This is a weekly chart, and that weekly chart, that pattern over here is a very interesting pattern, because these are our highs, which is the 131.92, which is, as you can see, and we have traded above it 1 2 3 4 5 6 7 8 9 10 11 12 13, so 15. It's about a move to the upside, so it would probably be considered a turtle soup to the upside. And then this big range gap down day, that is a reversal pattern. That being a combination of a turtle soup and a reversal pattern, that would indicate that the euro now is weak, and it's going, we're looking for a further push to the downside in the euro. So you can see this is a normal close, would indicate continuation to the downside. And looking at the daily chart for the euro, we had a pause here on Friday. So yes, that doesn't change the fact that we are going to be slightly negative to the euro. So, and of course we will be selling the euro if it takes out the low of the day. This pause in the index could be because the euro is up against the yen, but it is down against the dollar. So we might have, based on the basket, this is the basket, so it might be kind of neutral, or we can have this pause, if you will. So the euro, we are going to be 1 or slightly less negative. We will be negative on the euro. Going to the British pound, which is also one part of the weakness. It's actually as weak as the euro. And in addition to that, Prime Minister Cameron came out and announced yesterday or the day before that the economic situation in the UK is not that good, and it would require that the interest rate in the United Kingdom to continue lower at least through 2013. And of course, as you can see there is the reaction to the British pound and the weakness that you see here, that decline that we have here. Even with all that buying back that came in, we are still below. We couldn't even come back above the 160.64. So, and on a weekly base, we are still in the negative pattern, so we will be looking for the British pound to continue weaker. So the British pound is also weak, and we will put it in the same category as the euro. I would actually might dare to say that the pound is actually slightly weaker than the euro, based technically on what we see on the chart. Then we come now to the Australian dollar. As you can see that we are trading at the 104.19, which is based upon the index pretty much near, I mean, the all-time high based on the index is around the 105, so we're pretty much near the high of the range. So we're at the top of the bull market. It is definitely a strong currency. And we will be looking at it with the issue that I have with the Australian, that the buying that's coming into the Australian now is more as a safe haven, if you will, rather than a genuine or a bona fide fundamental buying. There is no, they will not be raising interest rates, they will not be doing anything other than maybe they would be lowering some interest rate more to stimulate the economy. And I'm sure that having the Australian dollar at such a high level is not really promoting the Australian economy, keeping in mind the weakness that we have in the dollar and the euro dollar, looking at the weakness that is happening in the Japanese yen, the weakness in the British pound, the weakness in the, still the dollar hasn't broken above the structure point. So having this thing standing up there north of everybody else can only be detrimental to the Australian economy. So I foresee that the Australian government to actually begin easing or lowering interest rates so that they can bring the currency down. But still, until they do that, until we actually be able to see those signs visually, we are going to be neutral to positive on the Aussie. We're not going to be fully positive. We're going to be positive to slightly negative on the Aussie dollar. Now, last but not least, we did the euro. We might as well look at the Swiss franc. And it is a mirror image of the euro. It is tied, it is pegged to the euro. It is the same setup that we have over here. It is pegged, as I said, to the euro, and we're looking for the same thing. So the Swiss is identical to the euro, is going to be slightly negative. We're going to be slightly bearish on the Swiss franc. And last but not least, we're going to look at the CAD. The Canadian, this is the weekly chart for the CAD. It is very strong. It is pretty much like the Australian dollar. But the difference is that the CAD is more of a, they both are commodity currencies, but the Canadian has more crude oil in their GDP, and therefore it is much more sustainable than, or it has much more resources in addition, over and above what the Australian have. They both have copper, they both have gold, they both have grains, but in addition to what they have equally both, the Canadian also has crude oil and other minerals. So I'm looking for the CAD to be slightly stronger than the Aussie, and the Canadian also do not have very high interest rate, so they really don't have too much potential to the downside of lowering too much the interest rate. So the risk of lowering too much interest rate in the Canadian is not as relevant as it is in the Australian. So with that, and you can see the closing that we had here, we had a pretty good, that's a reversal close. It has sold off tremendously below the low of the previous 2 days, and now it's coming back. This close of 101.17 is actually above the 2-day low, which is the 101.13. So that is actually a buy. So the CAD is actually a buy. So with that, we're going to go and we're going to mark the Canadian as 1. So with that, in order to set up our schedule, first of all, the no-brainer trades is going long the dollar and shorting the yen. So the no-brainer trade is shorting the yen. So first of all, I'll be going long the dollar yen. 2, I'm going to only put the yen here now. This is the yen trades. So I'm going first the dollar yen, then I'm going to go long the CAD yen, then I'm going to go long the Aussie yen, then I am going to go long the Swiss yen, the euro yen, and last but not least the pound yen. I'm still going to be buying against the yen. I'm going to be buying the dollar yen, the CAD yen, the Aussie yen, the Swiss yen, the euro yen, and then finally the pound yen. That vis-a-vis the yen. Once we set these trades, these are the 5 trades that you have to take tomorrow. There is no choice. I mean, there is no, that's it. You have to take those trades. Then other than that, if you want to do other pairing trades, I will be looking at the dollar and let's say going short the euro dollar, going short the dollar Swiss, I'm sorry, going long the dollar Swiss. I also can go short the pound dollar. So I'm going to go short the euro dollar, I'm going to go short the pound dollar, and I can go long the dollar Swiss. And I can begin, if I wanted, I can go long the or short the euro CAD. I can go short the euro Aussie. I can go long the CAD Swiss, and I can go short the pound Aussie, and I can go short also the pound CAD. Okay, so these are the trades. We're going to short all the M pairs. We're going to go long the pound dollar. Short the pound dollar, short the euro dollar, short the dollar Swiss, and we can go long the pound. We can go short the pound CAD, we can go short the pound Aussie, and we can go short the euro Aussie, the euro CAD. Okay, that is the indices. So let me save that